Albert, being a value-based investment advisor for 14 years now, that's a long time. Why did you choose this particular investment strategy? How did it become your niche?
Sure, good question. One day I was driving to my best friend's home and I was listening to a business channel. I heard a gentleman talk about a portfolio that did very well from the period of 2000 to 2002, a time when the stock market really struggled. And it caught my attention. Next day I went online and did a whole bunch of research on the portfolio. And prior to that, I really wasn't very familiar with value investing. So it opened up a whole new spectrum for my business, and I started researching value investors, Warren Buffett, Seth Klarman, some of the best value managers out there. And I noticed that that their returns were a lot more stable than the market as a whole. So when there were corrections, they would correct a little bit less, so they would recover a little bit sooner. And they didn't need to rise as much to recover from corrections. So it's all about preserving capital in down markets, and it's not always the case, but historically, if you go through long periods of time, the value portfolios did hold up better.
Now, your nutritional and health philosophy mirrors the way you construct a value-based portfolio for your clients. Why? What's the connection?
The thing that you want to look for in a value manager, somebody who manages the portfolio, is you like to see them have their own money in the portfolio. You know, they're eating their own cooking. They have an incentive to do well. So whatever you put in your body is very important. They say your body is your temple. So putting in high quality stuff in your body, well, you want high quality stuff in your portfolio. There's a parallel there. They're equally important.
Your daily workout and vitamin consumption ritual is fascinating. Please walk us through that.
So it started when I was 15. I went on a surf trip with some friends in Mexico, and I caught Montezuma's Revenge, which was a parasite. And luckily, in my mom's dental office, we had a homeopathic doctor who also was in the office. And he took a blood sample, showed me the parasite that I had, and gave me some tinctures, and sure enough, it was gone very shortly. And I said, wow, what is this alternative medicine? Because Western medicine probably wouldn't have caught that. And so that opened my door to health and nutrition. And since then, for the last 15 years, I've been on a product called Superfood. It's a product I take every morning. Inside, there's all this good stuff that you and I we're not going to have time to eat. You know, there's blue-green algae, wheatgrass, alfalfa, buckwheat, lemon peel, just 30, 40 different ingredients, all put into a dry powder. And I just pour it into a glass of water, I stir it, drink it. It doesn't taste very good. Every time I give it to one of my friends, they go, oh, I can't drink this stuff. But you can put it in a smoothie and cheat that way. But I just drink it with water, I chug it down, and then I'll have some gluten-free oatmeal, some blueberries, some bananas. I'll take vitamin C, I'll take olive leaf extract, fresh ginger every morning because it's good for your stomach, your digestion. So, gosh, there's probably 30 things I do in the morning that are part of my food regimen, and it just gives me a ton of energy. That way, when it's 5 o'clock and it's time to go home, I'm not snoozing on the couch.
What makes value-based investment strategy so different from other investment strategies?
You may have 60,000 stocks in the stock market globally. Value investors may only have 2 or 3 or 400 companies that are on their watch list. And they're looking for something to happen to the company to where the stock may dip down to their level where they can get it at a 30% discount, for example. And it's not just good enough to be a good company. You have to get the right company at the right price. So maybe a company has a bad quarter, or there's something that happens and Wall Street sells that stock off for whatever reason. They had a bad quarter, there's a problem in another country with the company, and then the value guys are saying, well, are all the reasons why I wanted to buy that stock still intact? If they are, well, here's my opportunity. It's 10, 20% below where it was just recently, and it's at my buy level. That's what value investing is all about. Being patient, not trying to follow a hot trend, staying with those staple companies that we believe in, that we consume their products. Those types of companies are a lot more stable than a company that has a new drug or a new technology, which if it doesn't work out, their earnings could go to zero.